Welcome back to the Crypto Saving Expert Morning News Show. Today we are running over the Bitcoin price. We're going to take a look at the chart and we're going to run through the recent news. So we do these every single day. So make sure if you enjoy this content, make sure to like and subscribe so you can come and watch us talk about the news and see what's really happening within the cryptocurrency market space. And we also have that Martini guy, Jordan, our founder, who will be joining us on a couple of these lives as well. He's not here today, but he will be here in the future. So make sure to subscribe so you don't miss that. First of all, let's take a look at the prices of Bitcoin. First, we have it at currently $17,220. So we had a nice little rise yesterday. Bitcoin has been so flat over the last couple of weeks. So it was nice to see a little bit of a pump and see some shorts get liquidated yesterday. We've also got Ethereum up at $1,283. So let's take a look at the Bitcoin price chart. You can see this is the pump we saw yesterday. We came from around $16,800 quite quickly up to $17,200. And now taking a look at the indicators, we have the MACD here first of all, and it is showing a bit of bearish momentum. That's expected after we see this huge pump, but if we start to see just a steady holding these levels now, then this will neutralize over time. RSI is currently saying that it is overbought, but as I said, that is expected after we see this pump. So then if we continue to stabilize at these levels, then this will neutralize as well. If not, we may see a bit of a pullback because of that rise we have just seen. Moving on to the news that now though, before we get into that, I'll just remind you, if you have any questions, then put your questions in the live chat down below and then we can answer those at the end of the video. First of all, we're going to look at this news first. Tesla investors want Elon Musk to stop wasting time on Twitter. Investors and fans of the famous electric vehicle manufacturer Tesla want Elon Musk to stop spending too much time on Twitter. And the fans feel left out after the company's CEO Elon Musk successfully acquired Twitter in late October and started dedicating a good portion of time towards improving the social media platform. So there's a couple of long-term investors mentioned in this article who have chosen to sell some of their Tesla shares because they just don't think that Elon is spending enough time on the company. And recently, Elon has been sharing the Twitter files. A day does not go by without him tweeting about the progress on Twitter and requesting input from his followers or even sharing memes. The Twitter files show the social media company has, in the past, colluded with politicians and sitting governments to suppress free speech. And the censorship activities were hidden from Jack Dorsey. In a December 3rd tweet, Elon Musk promised to release the next installment of the internal documents and files. In response, Twitter's founder and former CEO Jack Dorsey requested Mr. Musk to release everything without a filter. And Elon said that they were even hidden from Jack Dorsey in this thread of tweets down here. So hopefully in the next couple of weeks we will find out what has really been happening with Twitter, and we have already seen some of that already, and it's very interesting to see what's been going on. And Elon is trying to be as transparent as possible. He's made some controversial decisions since he joined Twitter, but transparency is really important, especially for social media platforms, to see what is happening. We actually saw, I think there was something on Twitter yesterday saying the specific parts of specific discussion points that have been blocked from being trending on Twitter in the past, and that is looking to be changed now that Elon has taken over. Moving on to Coinbase's revenue could fall by 50% or more in 2022, and this is from CEO Brian Armstrong. Now this is to be expected. We were in a bull market last year. We saw huge gains, and this year has been pretty dreadful. I actually listened to a podcast with Brian Armstrong in the other day by the Diary of a CEO, and it was really interesting to listen to. And he spoke about this as well, and how if the company sees a huge rise, then he does get a bit fearful because it's the cryptocurrency market, and we do see these huge bull runs, and then we see these huge bear markets as well. Taking a look at this article, America's most prominent crypto exchange, Coinbase, could close the year on a sour note due to the ongoing bear market and ripple effects of FTX's collapse. The company's CEO, Brian Armstrong, said that Coinbase's revenue could decline by 50% or more this year. Last year, in 2021, we did about $7 billion of revenue and about $4 billion of positive EBITDA. And this year, with everything coming down, it's looking, about roughly half that or less. That was an interview with Bloomberg's David Rubenstein, peer-to-peer conversations. Coinbase has earlier indicated that it could incur losses this year or no more than $500 million based on adjusted EBITDA, a measure of earnings without certain costs, such as interest and depreciation. And the FTX collapse would have an effect on Coinbase as expected. During the interview, Brian Armstrong said that it was a case of massive fraud as opposed to what Sam Bankman-Fried wanted to portray as mismanagement and accounting mistakes. He said, it appears that they took customer funds from their exchange and actually commingled them or moved them into their hedge fund and then ended up in a very underwater position. And that was, I believe, against their terms of service and against the law. And the Coinbase stocks and bonds were affected by the FTX collapse. According to the Financial Times, Coinbase bonds that mature in 2028 have fallen by 10%, leading investors demand an elevated 14% yield to purchase the debt. The said bonds are now priced at 59 cents to the dollar compared to 93 cents earlier this year. So hopefully in the next couple of years, this will pick up again when we see the next bull market. The exchanges should perform well as well. But when we're seeing a bear market like this is expected to happen. Moving on now, the Ethereum stakers that had staked for ETH 2.0 are looking to get their tokens back as early as March 2023. So the withdrawals could happen when the Shanghai hard fork takes place, and that's expected to be in March 2023. Taking a look at this, Ethereum deposit account contract holds 15.5 million Ethereum worth $19.48 billion. And this is data from Etherscan, but this won't all be unlocked at once. We can take a look at this data down here. Once the Shanghai upgrade is implemented, full validators exits will rate limited by the protocol. Only 6 validators will be allowed to exit staking per epoch, which is every 6.4 minutes. This means that only an estimated 43,200 ETH will be withdrawable daily out of the 15.572 million highlighted above. And further doing the math, it would take roughly 360 days to withdraw all the ETH from the staking contract. But such a scenario is improbable, as validators staking ETH are at the core of Ethereum's operations and security as a proof of stake network. So this protects us from seeing a huge dump in the market. That can't happen when we have this slow release of the tokens. And people that have staked their tokens do believe in Ethereum in the long term. That's why they staked their tokens earlier and provided security for the network. Moving on now, before we don't forget, remember to ask some questions so that I can answer some at the end. Moving on to the next article, the US Senate committee to subpoena SBF if he fails to appear at FTX hearing next week. So this means he has to provide information in court. The founder and former CEO of bankrupt crypto exchange SBF, at a hearing next week, plans to issue a subpoena if he fails to show up. According to a public letter dated December the 7th, the Committee on Banking, Housing and Urban Affairs requested the appearance of SBF at a hearing scheduled on December the 14th. The hearing, titled Crypto Crash, Why the FTX Bubble Burst and the Harm to Consumers, is set to probe SBF for the failure of FTX and its sister trading firm Alameda Research. As the founder and CEO of FTX Trading Limited at the time of its collapse and the founder, principal owner and former CEO of Alameda Research, you must answer for the failure of both entities that was caused, at least in part, by the clear misuse of client funds and wiped out billions of dollars owed to over 1 million creditors. So this will be really important. Obviously, we want Sam Bankman-Fried to make his points on this, and hopefully we can clear up what has actually been happening behind the scenes. We want to get to the bottom of this so that regulations can be put in place so that this can't happen again. Moving on, we have the next article about the US judge orders Celsius to return $50 million in crypto to its users. So we are seeing, this was actually at the start of this bear market, this is one of the catalysts. We are seeing things that happened quite a few months ago now that have caused huge declines in price of the cryptocurrency market start to be cleaned up. Celsius is to return $50 million to its users. According to a Bloomberg report, the order was made during a court hearing on Wednesday, and it applies to a set of assets worth $44 million in September. The ruling shows that Celsius stakeholders and advisors have concluded that crypto assets in the firm's custody accounts belong to users. However, the fate of assets in interest-bearing accounts has not been decided. So, unfortunately, a small portion, about 4% of the assets on the platform, belonged to its custody accounts, while the rest were in the earn and borrow programs. And we reported earlier in September that Celsius filed a motion to release the assets to the custody accounts to users. Out of the $210 million in its possession, the firm sought approval to return just $50 million because a majority of the assets were transferred from the interest-bearing accounts before its bankruptcy. And we have some other news here. I can see if someone's asking about the USDT warning in this. That is the next article we have here. Coinbase calls on users to convert USDT to trusted stablecoin USDC. So on Thursday, the public traded cryptocurrency exchange Coinbase announced it's removing conversion fees for its customers to switch their USDT holdings to USDC. And USDC is their co-founded rivalry stablecoin to USDT. The crypto exchange failed to provide a detailed explanation for the move, but it mentioned that the recent events of the past few weeks has put some stablecoins to the test, and we've seen a flight to safety. Coinbase touted USDC as a more reliable and trusted stablecoin. We have seen some rumors about USDT and its safety in recent weeks, and Coinbase are trying to push their own stablecoins. Coinbase said the development is directed at giving customers safe, responsible ways to hold and grow their crypto. Some think it's a ploy to uplift USDC's market dominance in the ongoing stablecoin war. We've also seen Binance take this step as well, and they automatically convert deposits of 3 USD stablecoins, USDC, USDP, and TUSD, to its own stablecoin, BUSD. But Tether remains to say that it is fully backed, so this isn't a huge scare into the markets. They are still saying that they are fully backed. Despite the contests, USDT remains the largest stablecoin by market capitalization and trading volume per market cap data. At the same time, it has also been a subject of criticism and scrutiny on the safety and legitimacy of its reserves. On multiple occasions, however, Tether debunked FUDs, saying that its reserves fully backed USDT tokens in circulation. More recently, Wall Street Journal issued a report warning that the risking loan risk on Tether, which could leave the company with less liquid assets to fulfill redemptions during the crisis. But Tether debunked the report, saying that its collateral size and quality ensures that Tether backing remains above 100% at any time, and that its lending policy is very conservative and the margin call very effective, as we demonstrated in the case of Celsius. So my opinion on this is that we want to diversify as much as possible, and people talk about diversifying within the cryptocurrency markets with altcoins, with Bitcoin, with Ethereum, but we also want to diversify with our altcoins as well, because we don't have the transparency yet, and we hope to get that in the future, but we can't fully put all of our trust into a stablecoin. We saw this with USD, we saw this with UST, and you know there is a difference between algorithmic stablecoins and reserve stablecoins. However, if we just keep that diversification, then we won't see a huge blow that many people saw earlier this year. And finally, we have one last article for the day. The US SEC issues new disclosure guidelines regarding cryptocurrency. About a month after the FTX collapse, the United States Securities and Exchange Commission, the SEC, has released new regulatory guidelines requiring firms which issue securities to inform customers of their risks and exposure to the crypto market. According to a report by CNBC, the new guidelines issued by the SEC seek to protect investors' interest after the FTX debacle, which wiped out billions of dollars from the industry, causing an adverse chain reaction to other firms such as Genesis and BlockFi. The crypto giant filed for bankruptcy on November the 11th after its liquidity crunch and allegedly mismanagement of funds affected more than 100,000 investors who held their assets on the platform. So, due to the size of the impact, the SEC has introduced new guidelines that prompt publicly traded firms exposed to the collapse of FTX and other crypto-related businesses to disclose to customers any risks from the disruption of the digital assets markets. The companies are to include their cryptocurrency holdings and any risk exposure to the crypto market in their public filings, according to the FTX, bankruptcy, and any other market developments. With the new rules established under the Securities Act of 1933 and the Securities Exchange Act of 1934, the Commission has also mandated companies to reveal financial material information to investors, including how the recent bankruptcies and their subsequent effects may affect their operations. So they're calling for transparency, and that is exactly what we need in this space. A lot of people have come into the cryptocurrency space because of the transparency we see on the blockchains, but these centralized exchanges and other centralized companies aren't giving us that transparency, and it's really defeating the object of what we are here for. So that is all of the news for today. Let's check back in at the prices. Bitcoin is at $17,220 and Ethereum is at $1,283. I'll just check in the chat to see if anything's going on here. Also, remember to like and subscribe if you've liked this, and make sure to come back tomorrow. I will schedule them all so you can put on your notifications shortly. Have we got any questions in the chat before this? When moon? Hopefully soon. Do we think Bitcoin has bottomed? It's a tricky question here. I like to go against the overall opinions in the markets when everyone's feeling bullish. I like to feel bearish when everyone's feeling bearish. I like to feel bullish. At the moment, I am short-term bullish. I'm not sure if we have 100% bottomed yet, but that's only my opinion. There are many opinions within Crypto Saving Expert, and I'm sure we put some articles out on the Medium page as well with some analyst opinions. It's good to get a different array of opinions, and then you can put your own together and see what you think, and do your own chart analysis, and conclude your own opinions, because at the end of the day, it's your money and you want to make sure that you've made a responsible decision. You haven't based it off someone else's analysis. Any other questions in here? Someone's diversified with Luna, Celsius, BlockFi and FTT. Unfortunately, it has been a rough year for everybody within the cryptocurrency market space. I've spoke about the USDT warning. Yeah, it was just towards the end of the video. That seems like all the questions. When does the Crypto Saving Expert site launch? Very, very soon, and it's looking very good as well, so make sure to sign up for that as well. We do a newsletter every Tuesday, so if you go onto the cryptosavingexpert.com website and put your email in there, you can sign up and receive a newsletter every Tuesday. That is very interesting as well. So that's all for today. Thank you very much for watching, and come back to on Monday to hear more cryptocurrency news, and let's see what Bitcoin's price does over the weekend.